Well, welcome you guys. We are excited to have you here. My name is Brittany and I'm the community manager here at Verivest. And I'm going to kind of give you a little brief of who we are at Verivest before introducing our guests. So here we have the sponsor. Oops, sorry. Got to go back a slide. Oh, there we go. Who is Verivest? So Verivest is a real estate investment platform designed to bring transparency and trust to middle market investing. Our goal is to connect deal sponsors with high net worth investors to create a shorter time to trust. So here is the sponsor directory. As you can see on the left-hand side, you can filter throughout the platform for open opportunities. Verivest Verified and Verivest Gold sponsors, the minimum investment amount, property types. If there's a particular strategy you like, you can select that. And then there's risk profile as well. So that is kind of a cool way to check out the platform. And then for the verification requirements to be on our platform, the minimum, you have to have no felony criminal convictions in the past 7 years, sign the Verivest Code of Conduct, no unfavorably resolved lawsuits, no personal or business bankruptcies, no regulatory sanctions. So that is the minimum to even be on our platform. And then we have the highest level of transparency, which you can see Nighthawk Equity is a gold member of our platform. They are 100% monitored, so they are allocating the money the way their operating agreement said that they would, and they have $51 million of investor capital managed. All right, so some sponsors will engage us to verify their track record. This is a screen grab of Nighthawk Equity's track record, and you can kind of see the investment amounts as well as the exact investment. So it's laid out and transparent for you to browse, and as well as the inception dates there on the right-hand side. All right, I know that was brief. If you would like to connect more, we have the Verivest Community Network or my information there on the right-hand side. And then I would like to introduce our guest for the evening or the afternoon. If you're on PET, we have Drew Kniffin. He is a corporate lawyer by training, an investment banker. He has overseen the growth of Nighthawk since the early days, and he is the managing partner at Nighthawk. And we also have Garrett on the line. Garrett is also a managing partner. He joined Nighthawk as a partner in 2018 with 160 million of assets under management. He built a property management company with 125 employees, and he's been full-time in real estate since 2011. So without further ado, I would love to let our guest take it away. And if you guys have any questions throughout the presentation, feel free to put them in the chat box or the Q&A, and we'll answer those at the end.
Awesome. Thanks, Brittany. We at Nighthawk are super excited to be here with Verivest and have you guys monitor our stuff and really build that trust platform. So it's a big thing that we've seen missing is how can we make people believe and know and trust us more? So having Verivest monitor our stuff and put their stamp of approval on our work is awesome. So today we're going to be talking about operational strategies that we use at Nighthawk and that other people can use perhaps to maximize investor returns and also reduce risk, right? So we can all promise the moon and stars. The question is, what can you do to reduce the risk and increase the chances of delivering on those pro formas, on delivering on those expectations of increasing value, putting out distributions, and giving the investors a comfortable, reliable, easy experience. And so that's what we want to talk about today. We picked out 4 things that we do that I think can add value for our investors. So we'll go through them here. They are, first off, in-house asset management. Especially if you're overseeing third-party property management. Secondly, regular auditing of your PM. That's your property manager. Third, in-house construction team. And then lastly, utility reduction strategies. So Garrett and I, my partner, we're going to go through these 4 strategies together and share them with you, a few high-level details of what each one looks like, why we do it, how we do it, and how it can add value to the investors, reduce risk to the investors, and ultimately give a higher chance of getting those returns that are expected at the front. And lastly, stick around. We're going to have a little presentation at the end just about how this has actually worked on the properties that we currently have under management. So Garrett's going to show with you more about that. First off, in-house asset management. So what I've seen amongst our peers, amongst other people who are in the process of, especially doing multifamily, but really any type of syndication, is that so much of the energy, so much of the talk, so much of the investment of resources is in finding the deal. So finding the deal, making offers, raising money, and then you close the deal. And then there's this sense that you just turn it over or throw it over the fence to your property manager, and that it all will just happen from there. And of course, it doesn't work that simply. There's a lot more to it. But often mentally, the general partners at that point in time just detach themselves from the deal with regards to their energy and attention and time, and they moved on to the next deal. They're out looking for the next one, and no one's looking at the asset exactly to see, hey, how are we doing week to week, month to month? Or maybe they are looking at the financials, the actual financials, but they're not looking at the leading indicators of market rents. They're not looking at the leading indicators of unit turns. How long does it take to turn units? And so those things are causing people to, stumble a little bit. And because they're not looking at those leading indicators, they're late to take corrective action. And maybe in an economy where the tide is rising, where just things are going well, you can get away with that. But when there's a recessionary environment or a tougher environment, having someone oversee that asset really carefully on a day-to-day basis is going to make a big change. So at Nighthawk, what we do is we have an experienced asset manager on staff, on payroll. This person sits over the third-party property management that we have. Our asset manager has literally decades of experience, has seen thousands upon thousands of units. And so he's seen everything. And, sometimes Garrett and I talk to him and he's teaching us things, or he's saying, well, this is what's really going on, or you might want to look out for this. So he's seen it all. And that wisdom really can help us pivot and move more quickly, stop things from happening. They're going in the wrong direction, and move the property more quickly to where we want it to go. So what do the investors get out of that? They get cleaner financials. We get smoother draws, money from our lender to do construction projects to improve the asset, and ultimately on-time distributions for investors. The investors receive the benefit of that in-house asset management in these forms. And one thing I wanted to say, this is true both for the in-house asset management as well as for the in-house construction that Garrett's going to talk about in a minute, is these headcounts are 6-figure headcounts that Garrett and I and our partner, we actually are essentially paying out of our own pockets, right? So it's money that we're investing into the property to make it operate smoothly for the investors. So it's a big ticket purchase, but I think it's the right thing to do to give that higher experience, to give the more smooth operational experience. Strategy number 2 is auditing financials. So again, many operators receive their monthly financial packet. It's a lot of information. It's often sometimes 100 pages of financials, check images, reconciliation of documents. And in the midst of everything you have going on, you kind of rush to look at the numbers. Where's the actual to budget numbers? And you kind of drop your eyes down to the NOI line. What is the net operating income for the asset last month in reality versus what we thought it was? And then they punch out a report to the investors, right? And so when you do it that quickly, there isn't checks and balances between the operators of the asset, your third-party property management, and you, the syndicators, and ultimately your investors who you're stewarding their money for. So this is what Nighthawk does, right? We, with that asset manager, with that first strategy we talked about, this is one of the things that we spend a considerable amount of time doing. We're doing a deep review of all the financials. So that's not just the 3 financial statements, but it's also looking at accounts payable, invoices, where are our escrows, where is our cash position at the bank account. And it is a significant amount of time. There's almost a week every month, so like 1/4 of the time, where Garrett and I see our asset manager really kind of go heads down into the financials of all these assets to verify that things are going right. So what do the investors get out of this? I'll tell you 2 stories of things that we've caught on our properties that if we weren't doing this deep dive, we would have missed, right? So one of them was an invoice that was paid in May. This happened last month. And yet it was still on the roster to get paid again. It was still out there. It hadn't been converted to a paid status. So we caught it midstream. It was about to get paid a second time. A second thing that we saw was just step back and think about a property manager. Property manager, a third-party fee-based property manager. They're managing your property, but they're also managing maybe a dozen, maybe dozens of other properties. And there's a phenomenal amount of paperwork. And in that process, it's inevitable that once upon a time, maybe often, an invoice for property A gets filed with property B. And that's what we saw here. We saw an accounts payable for our property, and we knew that had nothing to do with the operations at that property. So we alerted our property manager to it. Hey, what's this? Why is this? We don't recognize this vendor. We never authorized this expense. And sure enough, it was oh, you know what? You're right. That was a different property. We made a mistake. Our bad. And so we caught those things. These auditing process catches invoices or accounts payable that are about to be paid. And so both of these things will result in savings to investors. And, in the next 2 slides, Garrett's going to share with you a little bit more. And these other ones, they continue to get more and more valuable to investors, and they continue to provide a better experience to the people that are ultimately trusting the syndicators with their funds. So with that, Garrett, I'll turn it over to you, and you can share a little bit more.
So in-house construction management is the third bucket that is really important. So a lot of times what people do is they'll either pay their property manager to oversee their construction, or they'll maybe find a GC that they'll use, third party on their stuff. But again, there's no direct oversight necessarily in that. And a lot of things can happen, especially now with COVID and all the things that have happened around the material shortage, labor shortage. You want to make sure that you're as close to the action as possible. So a lot of people that are doing deals out there, they may just, especially these groups that come together that don't have like a cohesive nature where they've been working together for a while, they're just going to run into issues along the entire way with backups. And this ultimately really impacts your investment because timing is very important. If you're not hitting your targets in time and things get backed up too much, it directly impacts your IRR and your cash on cash return. You're going to be also probably dealing with poor quality. And that can be a real issue for these projects that you may go unnoticed as an investor. Often the operators are not necessarily going to mention every time that something's late or this or that, which is okay. But enough of these backups, it's going to start to see severe negative impacts on your returns. So what we do that's different is we actually are very hands-on with our construction management. We hire in-house. Again, this is north of $100,000 hire that we're making. This person is directly in charge of mostly interior renovations because those are really the hardest things to accomplish. And so you're going through, think about it, the major game plan of any real estate operator is you want to go in, renovate units, making them as nice as they can be or modernize them as much as possible, and then charge more for the rent. Well, if you're relying on just your property manager to do that, they got a million other things going on, you may miss those targets. And so for us, it's super important to have this position so that we can control when those units are delivered and when the rents are actually being raised. So the other thing they can do is they can source supplies. So you may be paying third party or property manager an increased supply amount. We'll multiply that like times 200 apartments. It ends up being significant cost difference. So you just by sourcing let's say a superior vendor, we were able to take, cabinet costs down from 4K to 2K times 200 units, you're saving $400,000 just by doing that one part. That could easily pay for a six-figure hire to oversee this kind of thing. So that's the way we look at it, and we found a lot of success with that. Other thing a lot of operators are not doing out there is utility reduction. And we think that this is a pretty unique opportunity for most deals that are out there. And this has one of the highest ROIs for something you can do on the expense side. So people just do nothing most of the time. They're just like, okay, well, that's what the utilities cost. And what we do is we look at it and we say, hey, if we could come in and replace, fixtures or toilets or whatever, this is going to help us reduce everything. We build it into our CapEx, so it's ready to go. And one of the biggest item that you can change are the toilets. So toilets, typically on a per toilet basis, we're charged about $325. That includes labor, that includes the materials, and that also includes a complete sweep of any potential leaks that exist. And so our cost maybe for 300 new toilets is $97,500. Maybe the water bill costs $200,000 a year. We're going to be able to reduce that by 40%, which is huge annually. Okay, so this really pays for itself almost in the first year, typically, but take that against the cap rate, let's say 4.5%, which is where most things are trading in markets these days. You're going to create $1.7 million worth of value just by doing the toilets. So all of our deals, we build that in. We're not seeing a lot of people do that. So it's great for when we go and acquire a deal. We know that that's likely there right out the gate for us. And it just creates a ton of immense value. So want to share with you guys a bonus here. So those are four main, operational strategies that you can implement that maybe other people aren't doing or don't know about. What I want to share with you is a little bit about creating the best product in the market. And this is really cool. So we found that if you're going to create the best product in the market, there's a few things you need to do. And typically you want to create the best product in the market in the best location that you can find. So one of the main things you can do is that if you cannot hire in-house for construction, pay more for a company that has their own exclusive employees. And this is so important. A lot of contractors out there, what they do is they don't have exclusive employees, so they can't really control them. They're working other jobs, and you're going to be left in a position where you can't move through your project fast enough and quality may suffer. What we do is we spend extra money on groups that we know have exclusive employees or in-house employees that do all the work, so we know exactly what predictable outcome we can get each time and in what timeline. The other thing is you want to use the highest level designer you can for everything. This isn't just the clubhouse. This is everything. So I have a bit of a design eye. I kind of know where things should be, but there are people that do this for a living. That's all they do. We try to hire the best person we possibly can that knows multifamily. They can come back with renderings. They come back with the colors. We test them out, and it's creating this really unique product in the market. And doing that helps us just create something that the block has never seen and people want to live at. And here's the results of doing that. This is one asset we have called the Stone Crossing. You can see how it looked prior, kind of beat up in the corner with the roofs and the pool and all that. And so we changed the name to the Davis. We rebranded it. We used a designer for this stuff so we can get the right colors and everything like that. And we used the same thing, a GC that had their own in-house employees. So what's happening now, the result of doing that is we're reaching our year 7 rent targets in year 2. We were making distributions throughout the entire pandemic. We had minimal effects to performance despite COVID, completing 90% of exterior renovations in only 7 months. We're significantly exceeding revenue expense targets. Here's some pictures of what that looks like. So this is what it looked like before, really bad, nasty looking property overall. And this is what it looks like now. So we've just done a ton of work to this. We changed the tennis court, turned it into a nice dog park and a grill station, redid the parking lots, full overlay. And the majority of this work, again, was done by that GC. The interiors, you can see, we've turned them around completely as well, which is really great. And this is the coolest part. Not this, well, this is cool. But the coolest part is this. So we went into this with a pro forma rent of, in the middle, you can see $750 for 1 bedrooms up to 910. This is where it was at purchase. This is what we're getting now. So we anticipated a 25% increase in rents. We're actually getting 52% all the way up to 83%. So investors that we brought this deal out, we said, hey, you're going to get a, 1.8x equity multiple in 5 years and a cash on cash return of, I think it was like 8%. We do that pretty much for all of our deals. Our investors now are on pace for a 3.2x equity multiple based on this rent increase, with all the numbers being similar to what we projected. This is another one, Sierra Place. So it was Sierra Place. We did the same method. We used a designer and in-house GC on everything. And we turned it into this property called Monarch Place, really modernized it. Achieved all of our projected rent targets within 3 months. Again, minimal effects despite COVID, 90% of the exteriors in 7 months. That's a big money shot when you can show a new product on the outside and people look but and they're like, whoa, what is this new product on the block? You change the name, you renovate everything. The shock value there it really does a number on your rents. So same thing, we're exceeding revenue and expense targets here. So these are old pictures of this deal. This is what it looks like now. This was a weird one. We had to figure out what to do with these 30-foot gables. And we went in and made it, we put these, you guys can see kind of there's these 3 windows in the top of the gables. We put some nice cedar wood across the top, repainted everything. It looks really good. This is what we did to the interiors. So here's what's happening to our rents. Rents at purchase, you can see right here, $733 up to $1343. So we initially jumped them up to around 25% on average. And here's where they are now. And that's 30% all the way up to like 51% on the rents. And so now investors are on pace for a 2.4x equity multiple versus what we said initially. And it was just following these simple things that really, I mean, obviously the operations have to go well. You have to know what you're doing on that side. You have to have a good PM. But if you can create a product that the market has never seen, you have a much better shot at getting higher rents than you've ever seen that the market's even seeing, and even leading the market, which is really cool. So if you guys would like to learn more about how to get into a deal with us, if you'd like to invest or look at something that we have going on, we actually have a deal that we're doing right now. You can reach out to us at investors@nighthawkequity.com. You can call or text us at 808-500-7135. You can also go to nighthawkequity.com/join and join our investor club. We have deals about once a quarter and they do fill up really quick. So when we do have one, you want to jump on board, you can just email us and simply find out more information about when we have one going on. We're implementing all these things in all of our deals. We're having immense success. So we look forward to speaking with you, and we hope you got some value from this today. So now we want to do questions, right?
Yes. What are your questions, you guys? I know you've got some burning questions. So if you have any questions, put them in the chat box and Drew and Garrett can answer them for you. Let's see.
I'm going to leave this up, actually.
Don't be shy.
Silence them.
I know. I'm like, don't be shy, you guys.
We answered all the questions that exist.
I learned a lot from the presentation. It was really great, you guys.
One other fifth unique that you didn't mention, Garrett, I thought was kind of played into what you said was consistent market surveys, right? And that enables you to do the market increases.
That's right. How many? We got a question.
Yeah. Yep, we got a question. Go ahead.
How many full cycle deals have you done? Worst return or loss on any? So I'll just say real quick, my first company, I I was a part of 7 full cycle deals before I joined up Nighthawk. And then Drew and Michael and some other guys, they had some deals go full cycle recently. Maybe Drew, you could talk about that.
Yeah, sure. So Nighthawk, one of the things that we're proud of is we've never lost investor dollar, never had a capital call, right? So in all of our operations, 17, almost 18 deals to date, that's never happened. We have had some deals, especially early on, that didn't meet our numbers. If anyone tells you that that's never happened before, you should run. And Verivest will probably sniff them out and tell you their numbers are bogus, because everyone has ones that don't work out well. So those ones were in the mid-single digits IRRs. Those were, I will say, a while ago. I don't think they represent what we're doing now, but those were some of our deals that were underperforming, right? So those were before we put in these 4 uniques. But again, never lost investor dollar, never had a capital call, and fully audited by Verivest. So really happy to have people sniff around our numbers and see everything. Alongside that, we've had a lot of ones that have over exceeded the ones that Garrett said. There's been a lot of other ones that have been in the high teens and even 20s on the IRRs. There's been a couple where we've returned 70% plus all the way up to 100% of investor capital year 2 or year 3 through a refinance. So it does run the gamut. I think any operator, if they're really honest, will tell you that. We're happy to share all our numbers with investors. You bet, Aaron. Thank you.
All right, you guys.
Anybody else?
Yeah, I'm like, we've got 2 great experts on the line. I like that you use a designer. Yeah, I like
That's
that.
Jonathan. I know Jonathan. Yeah, we try to do design work on our own, and you sort of learn what you can and can't do well. But these designers, the color schemes, the way they enhance the properties are phenomenal. It's something that's underused.
Yeah, they're incredible. I mean, you send them kind of what you want roughly, and then they'll come up with some really cool stuff around it. And then I use them pretty much for everything. So I'm like, hey, what do you think about this? And things change as you go through. Obviously, we typically will start with like a paint scheme that we think looks good on renderings, and then we'll go to the property and we paint it on one building, and it looks kind of whatever. And so we'll change the entire paint scheme in person, but the designer will take that and then run with it as well. So it's a bit of a process, but I think that's been super helpful for us. Aaron got another one. He said, Aaron, sorry, I haven't read through your background much yet. What regions are your target markets? So we are in the Southeast. So we're in right now, our main target markets are Huntsville, Alabama, which is a market that a lot of people can't get into, or they've been trying to get into for a long time, and just, or maybe they have a couple properties there. We have 2 properties there right now. And then Atlanta is another one that we're really making a good run at. We're having a lot of success in both. We're looking in the Carolinas as well to possibly expand to, but for right now, we've been focused on those 2 markets and just building out the portfolio. There's a lot of power you get in economies of scale. So having multiple assets in one market is really helpful for all of them. And so we've been focusing a lot where we're good at running the crews, running the property management company, not changing too many variables on the things that we know that work.
Well, this is being recorded, so you guys will be able to watch it again kind of closely and learn what they're doing at Nighthawk. It was a pleasure having you all join us today.
Thanks, Brittany. Glad to be on board.
Your presentation is amazing. Good job, you guys.
Thanks a lot, Brittany.
All right, take care. Thank you so much.